You know that feeling when you look at your paycheck and feel like you need a secret decoder ring just to figure it all out? Well, you've come to the right place. Today, we are going to decode a massive new law that's about to change the entire U.S. tax landscape. And we're going to figure out exactly what it means for your money.
I mean, this feeling right here, it's so universal, isn't it? The tax code can feel like an absolute maze, and this Reddit user they just nailed that frustration we've all felt at some point. It's exactly that confusion that we're going to clear up today, starting with the source of all these new changes.
So the source of these new rules is a law called the One Big Beautiful Bill Act, or OBBA for short. Yeah, that's the real name. It was just signed into law, and it basically reshuffles some of the biggest pieces of the tax code. So in this explainer, we're going to walk through exactly what it does and what it means for you.
And don't worry, we have a roadmap for this. We'll start with the why behind the law, then we'll cover two core concepts you absolutely have to know before we dive into the numbers. After that, we'll look at the big changes that affect you directly, what it all means for your paycheck, and then we'll finish up with a brand new playbook for the future. Sound good? So what's the big idea here? Well, for years, a lot of major tax rules were kind of like temporary fixes, right? They were set to expire every few years, and this created a ton of uncertainty for anyone trying to do long-term planning. So the main goal of OBBA is to take a bunch of those temporary rules, we're talking our tax brackets, standard deductions, and lock them in, making them permanent. The goal, in one word, is stability.
Okay, before we get into the nitty-gritty, we just need to make sure we're all on the same page with two really fundamental ideas. If you can nail these down, I promise, everything else in this new law is going to make so much more sense.
First up, the idea of a progressive tax system. Now, the tax ladder analogy here is perfect. It's a really common misconception that if you say jump into a higher tax bracket, all of your income gets taxed at that new higher rate. Nope, that's not how it works. You only pay that higher rate on the dollars that fall into that higher bracket. The income on the lower rungs of the ladder? That's still taxed at those lower rates. It's a crucial distinction.
Second, let's talk deductions versus credits. Think of a deduction as a discount. It reduces the amount of your income that gets taxed in the first place. But a tax credit, whoa, that is way more powerful. It's like having a gift card that you apply directly to your final tax bill, wiping it out dollar for dollar. A $1,000 credit saves you a full $1,000. A $1,000 deduction only saves you a percentage of that based on your tax bracket. Big difference.
All right, with those basics covered, let's get to the main event, the new numbers. These are the core figures that are going to affect every single taxpayer starting in 2025.
So check this out. The OBBB makes our current 7 tax brackets, the ones from 10% all the way up to 37%, permanent. Yep, permanent. These were scheduled to change in a couple of years, but now this structure is here to stay. This table shows you the income levels for each bracket, all adjusted for inflation, so you can get a really clear picture of where you'll land.
The next huge permanent change is the standard deduction. That's that set amount you can just subtract from your income right off the top. For single filers, it's now locked in at $15,750 for 2025. And here's the best part, it's going to be indexed for inflation, which just means it'll automatically go up over time to keep up with the cost of living. And if you're a married couple filing a joint return, that number just doubles to $31,500 for 2025. This higher deduction is a really big deal because it means way fewer people will need to go through the hassle of itemizing their deductions, which simplifies the whole filing process for millions of households.
Okay, so we've got the big universal numbers down. Now let's dig into how this new law makes some really targeted changes that'll have a real impact on families, homeowners, and even workers in specific industries.
Now this is a major structural shift. The personal exemption, that used to be a flat deduction you could take for yourself and each of your kids or dependents, well, it was actually scheduled to make a comeback, but this new law eliminates it, for good. The idea is that this is offset by other changes, like that larger standard deduction and a bigger child tax credit.
And this slide right here perfectly illustrates that trade-off we were just talking about. So while the personal exemption is gone, the child tax credit is getting a really significant permanent boost. It was about to fall off a cliff, but OBBA locks it in at $2,200 per child for 2025 and makes sure it'll grow with inflation in the future.
Now, the SALT deduction, that's for your state and local taxes. This is a huge deal, especially for people living in high-tax states. The old $10,000 cap was set to expire completely. The new law raises it to $40,000 for 2025. But
and this is important, there are two big catches. This new higher limit is temporary, and it can actually be lower for higher income folks. So yeah, this one's a bit complicated.
And for homeowners, this is another key change. It's being made permanent. The amount of mortgage debt you can deduct interest on was temporarily lowered to $750,000. Well, OBBA makes that lower limit permanent. The old $1 million limit is not coming back.
The law also introduces a handful of brand new but temporary deductions. It's really crucial to know these are only on the books from 2025 to 2028, and they have income limits. They include some relief for seniors, a new deduction for service industry workers with tip income, a break for people working overtime, and even one for buyers of new American-made cars.
Okay, so we've covered the new rules and all the numbers, but how does all this theory actually translate into practice? Let's connect these changes to the money you actually see in your bank account every payday.
It's a great question, right? Because a law that gets passed in Washington, D.C. can feel very, very abstract. But the most immediate place you are going to see these changes is on a form you give to your employer, the Form W-4. Your W-4 is what tells your employer how much tax to hold back from each of your paychecks. After OBBA, you'll definitely want to update it. So in Step 3, you'll use that new higher $2,200 figure for the child tax credit. And in Step 4, you can now account for those new temporary deductions we just talked about. Getting this right means you're not giving the government an interest-free loan all year. It means your take-home pay will be more accurate.
And then, when it's time to actually file your return, the basic process hasn't changed. You'll still gather all your docs, choose your status, and file on time. The key difference now is in Step 4, where you have to decide between the standard or itemized deduction, and you'll be armed with all the new permanent numbers we've just covered.
So after all that, what's the single most important thing to remember? What's the big picture takeaway from this massive tax overhaul?
So what's the big takeaway? It's predictability. I mean, for the first time in a really long time, the core pieces of your tax situation, the brackets, the standard deduction, they're stable. They aren't just set to expire in a few years. And this allows you to do some real long-term financial planning on a foundation that isn't constantly shifting under your feet.
And really, that leads us to our final thought here. With a more stable tax system locked in, the question isn't just about next April's tax deadline anymore. It's about the next 5, 10, even 20 years. The rules are set. The real question is your financial plan ready? Thanks for joining us for this explainer.